hotels posted lower than expected operating results affected by Omicron variant of COVID-19 in January and early part of February. Demand rebound has been pretty strong, with IHCL witnessing significant growth over pre-COVID levels in March, and demand trends as well as bookings look strong in April and May. Robust domestic demand coupled with expected surge in international travel bodes well for the hotel industry. The launch of Tata new app earlier this month is expected to provide IHCL significant access to a large and varied customer base of the Tata Group. IHCL is also scaling up new businesses, which provides an additional growth lever. The stock has corrected by about 10% from its 52-week high witnessed earlier this month. The hotel industry upcycle has just begun, and IHCL, with its strong balance sheet and presence across consumer segments, is well placed to benefit from it. In Q4, IHCL's revenue dipped about 22% compared to December 2021 quarter. EBITDA margin stood at 18.2% versus 29% in December 21, affected by drop in revenue. Higher other income, lower interest expenses, and exchange gains on long-term borrowings helped IHCL post similar net profit despite a sharp drop in operating profits. IHCL stated that demand environment has been strong post the Omicron wave. Leisure demand has already surpassed pre-COVID levels and continues to stay strong. Also, corporate and wedding demand have come back strongly. Meetings, award ceremonies have also started. In fact, demand in corporate-centric locations like Mumbai, Delhi and Bengaluru is expected to cross pre-COVID levels in April itself. IHCL has said that demand was significantly above pre-COVID levels in March and is expected to stay strong in April and May 2022 as well. With COVID-19 severely affecting operations of smaller hotel players in particular, the supply is likely to shrink. Also, funding for building a new hotel, especially for smaller players, has been affected. The supply is likely to remain constrained over the next 2 to 3 years, which is positive for larger players like IHCL. Demand pullback has been pretty strong, with demand improvement witnessed across segments. Also, preference for branded players post-COVID-19 will keep the demand side strong for branded players. Favorable demand-supply scenario will lead to improvement in the room rates, which would boost the overall top line for hotel companies. IHCL is opening 60 hotels, which would add more than 7,500 rooms over the medium term. Inventory addition would be across brands, which is Taj, Selections, Vivanta, as well as Ginger. IHCL plans to expand in an asset-light manner, with about 3/4 of the room addition planned to come in the management contract mode, wherein IHCL will manage the hotel and not own it. The company also plans to scale up Qmin by entering newer cities. IHCL aims to reach more than 25 cities and boost gross merchandise value growth. Also, it would significantly scale up the Ama business. IHCL has the strongest balance sheet in the entire hotel industry, turning net cash positive as of end of FY22. It recently raised about 4,000 crores via rights issue as well as QIP. IHCL reduced debt and bought remaining shareholding of 40% in Roots Corporation and aims to invest a part of proceeds in new growth projects. At the current market price, the stock is trading at an EV to EBITDA of 21 times its FY24 projected estimates, and therefore we believe investors should definitely add the stock to their portfolio.